Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Monday, March 10th. We're going to take a look at S&P 500, Nasdaq, SPY, and QQQ. Now, just quickly, the reason I'm looking at both S&P 500 and Nasdaq, and then also looking at SPY and QQQ, is I wanted to give general ideas around levels or zones for the overall market, aka S&P 500, Nasdaq. But I also wanted to give levels that I thought were important if you are playing like options or investing in shares of SPY or QQQ. So I'm going to start with S&P 500 and then go to Nasdaq and then go to SPY and then go to QQQ in case you want to flip around in the video. But here's where we are on the S&P 500. Now what I did was to basically say, okay, if things get really tremendously dippy, where do we have like really strong historical support? And I wanted to put it in zones. And here you sort of have like a motion through here, right? But you don't have a lot of historical movement in that range, right? But we do see here we have movement in the range up to 4,800, and then prior to that, it was down well lower than those levels. So that's why I say pretty thin price action up here in the context of it hasn't passed through these ranges before. Now, when it gets back into these ranges again in the future, then yes, it'll be the second time through. But what I did is I put these zones, I'm not thinking of these so much as 4 levels as I am as a potential support zone from this 48.18 down to 45.90, and then sort of a dead zone, like a zone where it could get really slippery if it slips through 45.90 down to the next potential zone, 43.17 down to 41.64. Again, this isn't to say it's going to get all the way down here. I did the math earlier. I don't want to just do the math and see what the percentage is. I feel like this was double-digit percentage loss to get down there. But it's if things get very dippy. I'll just say it that way. But it could catch plenty of support in these areas, right? Well, it's already lost that one, but this bottom here, it's much thinner, right? Here, maybe down here. Yeah, but yeah, it's a lot thinner. You really at least have something historically to go off of if you get into this 48.18 to 45.90 range, and then potential slip zone 43.17, 41.64. If we get below that, we can come in and take another look if folks are interested. Now Nasdaq, here are the zones that I have for Nasdaq. Potential support zone, if it gets through all of these like more recent ones, 16.212 down to 15.868, and then dead zone or potential slip zone down to 14.863 to 14.211. And yes, those are like pretty big ranges, but it's a zone of activity that looks like it might provide support. So I didn't want to clutter it up too much, so I took it in 2 chunks of 2 and tried to present it as those zones. Now, it has seemed apparent to me that things were going to get dippy. I put this video out 12 days ago, got just barely triple-digit views. Is the stock market on the brink of a sell-off? Now, where were we? Well, was it 12 actual days ago? So toward the end of February. So at the end of February, we're probably right around here, right? 19,000s. And at that point, we're still kind of moving sideways, but it was just looking to me like more likely than not, there was something more precarious about to happen. So I put that out 12 days ago, and then I put back-to-back days, 6 days ago and 5 days ago, more warnings of, hey, look, I think this might be for real. This feels pretty precarious to me. I think we're going to get dipsy-doozy. So I've been trying to call this out, but as you see, cumulatively, these videos have like 300 views between all 3, right? So, yeah, If you caught it and it helped you at all, great. If you want to help those get better reach, I would certainly appreciate that. But this has felt obvious to me for a little while now. SPY levels. We're already at one. We're already at 560. I had said in those videos that I was just talking about, my sort of initial target level would be between this 547 to 529. And I said, if things lose 529, then we could be in like a real world of pain here, which I still believe is true. You do then have 507, but I mean, things get just tremendously slippery. We have down here then 441. Now, I don't know that it would definitely like fall that far. It might get really just psychologically sticky around that 500 level. But if it gets into the 400s and there's no great reason for chunks of buying to be happening and bringing the market back up, 441 could potentially be in sight there. I will say I did post on X today, the 2 minutes that it was up and working, where I could post something, the circuit breakers. If you're not familiar with the stock market level 1, level 2, and level 3 circuit breaker rules, you should go look those up and just know what they are, know what they mean, know how they're triggered, and you should just know what those are. I do believe. But these are the levels, that I see for SPY. QQQ, same deal. It's at a level at the moment. This 467.50, trying to find support off of that. This was the level. This was the first level that I said, okay, if things are sort of like, it won't feel great, but if it is sort of healthy correction, healthy pullback range, 467 down to 447, okay, maybe. But if things get more painful, 422, 348. At the moment, I don't know what the impetus would be for investors to pop in and start picking this up. I really don't know. The forces that sort of kicked this off still seem to me to be full-fledged, non-relenting. I think the wild card here is potentially if Trump starts to print money. If he does what he did in the crash in 2020, where his response was basically he had no stomach for a view of him losing the stock market, right? Of him being president while the stock market was crashing. He had no appetite for that back in 2020. I don't know what his feelings about that are in 2025. For the time being, they look to be quite different. But if he reverts to that 2020 stance, what I would look for is for the Fed to start printing money, buying up a bunch of these assets, inflating, the stock price back up, coming in to cover some of that, and then probably printing checks, probably flooding cash into American households to, again, try to seem like things are economically great and stable and everyone is profiting and becoming richer, and that would be my expectation based on what happened in 2020. But again, every indication right now seems to be that he is more willing to just let it go and pursue his other interests, like Greenland and Canada and Gulf of Mexico and whatever. But but in any case, I do think at this point I would have a hard time understanding why things would get propped up between 467 to 447 and not slip those levels, right? Or back here on SPY, why people would step in between 547 and 529 unless it is some activity by the Fed or some sort of major like influx, like I said, like checks being sent out to American households or something. Then, yeah, maybe. But I think it would be that those things would be the driver, not, what you look for is a more secure, stable, actual market fundamentals driver. If we hide these for a moment and just take a look and see how this looks, this is what I was warning about in those early videos as well. was losing the 183, right? This 183 EMA, this is the long-term EMA. It has lost it. It is now putting in full candle bodies below. It's threatening a bearish crossover of the short-term EMAs to cross below the long-term EMA. That hasn't happened in a very long time. I mean, this was barely that, right? This was like much more chill movement than we're seeing at the moment. Again, you had a little lackadaisical one here, but nothing that's like this, just absolute rush, right? This is just an upside down V, right? Is what this is. Upside down V-shaped plummet. And so it has every indication at the moment that it's going to pull that 8 below the 183. If it does so, and it comes in at this steep of an angle, yeah, it's probably going to continue to look really, I'll euphemize things and call it leaky. How about that? QQQ looking certainly worse. It's a day away from a bearish crossover. I don't see any way that doesn't happen tomorrow. And it has not only lost the 183, but it confirmed resistance on it here, and now is moving far, far away from it. And so, yeah, it's in a rough spot at the moment. This should be parroted, or should look like exactly the same, more or less. Yeah, one full candle body on the S&P, and yeah, things actually look slightly worse here from QQQ versus the Nasdaq IXIC, but yeah, it's not pretty. This bearish crossover has already happened. Yeah, SPX, it's closer than it is on SPY, right? Let's see the proximity there, and yeah, this one's already crossed over, and it crossed over aggressively. So I would just be very aware of that and just know that that's the case. Again, I've been trying to warn about this for a couple of weeks. I had an inkling about this probably a couple of weeks prior to that, but felt reluctant to come out and start like shouting through a megaphone that I knew maybe a few hundred people would see. So I waited until I felt like it was much more imminent and obvious. And so that's why I waited until 12 days ago to put that out. But yeah, I again, my question will just remain: if the stance seems to persist, the current stance seems to persist, I don't know why buyers would step in this range. The sort of traditional concept of they're going shopping for things that are on sale, right? But that presupposes that the value is there. I don't know that people would feel that those things felt on par value at that point. But yeah, that's where we are at the moment. So, if you're a put holder or if you're otherwise finding ways to profit from the downturn, unless you want to sit on the sidelines or look for that elusive like dip buy the bottom opportunity, it feels like those are kind of your options right now, right? Figure out how to trade a bear market, which, like one of those 3 videos that I talked about was exactly that. Basically, these tickers go up when the market's going down. So you could do that, or you could cash out. One of my accounts, I just totally cashed out, and I'm sitting in either Vanguard retirement fund still, or the rest of the cash is sidelined. So you could do that. You could sit it out, or you could try to shop for sales and figure out when you think it seems like it's good deal territory, and try to scoop things up on the cheap. Just know it's probably, I'm slightly reluctant to say this, which should tell you a lot. It's unlikely to go straight down, right? There will be green days in here. I would just, if nothing else, I would say keep an eye on these EMAs and see where you are, right? Because a green day coming up and hitting the white EMA and bouncing back off of it, right? Proving the resistance point, confirming resistance off of the 8 EMA, that's not going to yield V-shaped recovery or a building back value, per share price at least. So just know a climb may be to just test the EMA, test the 183, test the 8, test the 21, test the 34. Rejections off of any of those, but especially off of the 8. I would be very, very cautious, assuming that you're catching the bottom or something like that. And again, minus some sort of news catalysts, political catalysts, I don't know where the levels are that will feel actually intrinsically valuable to people. Maybe the ones that we're talking about back here in these ranges, but that's a mighty, mighty far slide away. I think these don't line up very well. Again, when I did the math earlier, I think this is something like 14% away. I think this is something like 7% away. So we may see Nasdaq testing this one much sooner than later. Again, go familiarize yourself with level 1, level 2, and level 3 stock market circuit breakers. Know what they are, and I just wish everyone the best of luck in figuring out how it is that you want to manage through this situation, however long it may last. All right, folks, so I hope that your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.